Hello and welcome to the Friday wrap up here on Landy's Crypto Corner. Today is May 9th, 2025, and I'm back. I do apologize about missing the Wednesday check-in. Did have some personal issues going on, but everything's all good. Back in the saddle. Going to be doing these on a regular basis as normal going forward Monday, Wednesday, and Friday. But we're going to look at Bitcoin as Bitcoin did hit the upside target that we were looking for from Monday's video, provided that Bitcoin put in another higher low, which it did. Now you'll see that I have a highlighted area here on the screen. This is actually based on the weekly. And this is, some closes on the weekly that we need to be aware of and where we want to see Bitcoin close this Sunday for, this candle to not look like a giant rejection, but also to initiate continuation. So there's a few different areas that we're going to look at here on the weekly. First things first, the close open before we saw the first big top on the weekly here. That is right there where we saw last week's high come in, right around $98,000. Now, the next big area to pay attention to is going to be the close open up here at 102,565 on spot to the actual all-time high, which was just tagged. So there's two bigger areas to pay attention to. One of the main reasons why I have the area from the close open here to last week's high and the higher low highlighted is because that is the area where this week's move initiated from. But we should highlight right here at the 102,500 area to that 104, 445 or 104 and a half here, as that is another big area of interest on the weekly. And Bitcoin really loves to play on off of or on the weeklies, depending on which direction you're seeing price approach from. But in this case, we can kind of just take a look at what has occurred here. We had the big weekly structure from the lows to one of the kind of pause areas, the close open there before the major high was put in initially over here, to the actual all-time high close in that area as well. So we had Bitcoin on Monday. It had closed right on that 90 or just above that 93 and a half after tagging it. Set the criteria of setting the higher low on Tuesday's candle, which was a very nice thing to see because it actually met all of the criteria that I laid out on Monday, which was not just to close above the 95,218 level, but also set a nice three candle low back above the open of Sunday's candle at around $95,800 to $96,000 there. So we did get that, moved right back to 98. As I mentioned, 98, 99, fair game from some of the candles over here. And then it's really just 100,000 to 101. And then we're playing in the area between 101 and 104. So let's go ahead and take a look at this nice uptrend and where it is in terms of support and resistance on our support and resistance chart that I typically show for the local area here. Let's go ahead and actually, we're going to get rid of that and we will turn on, where is it here? Local. All right. So you can see Bitcoin held our lows off that weekly higher low close, moved right back to our big 101 to 104 area by the 1272 up there, even swung above to hit the weekly, which is the all-time high close on the weekly, by the way, at that 104.5 or so. It's 104,445 on spot. Now, if Bitcoin does trade above this area, it's really all about that 106 to 108.4 level. And that's where we had the double top on a daily closing basis. So this is very important to understand. Like, one of the main reasons that I started to get bearish on price action, even after putting in this all-time high, wasn't just the look. If you remember, back when this candle put in the all-time high, this was also coming off of a higher high structure, right? We had equal lows. We had a nice higher high. But this was a higher low with a very large swing that never got past. That was pretty bearish because it was showing that it was a rejection Not only that, when we came back up and made a higher high as it related to the trend on a close, you'll see that we double topped on a close right in the same area. So that was the other thing that made me a little bearish, just a little in that area. Now, I did give it a chance. We saw the nice swing down to 101. We tried to push back up, grab liquidity, and then subsequently put in a lower high swing and close here. Technically, if you're going to take the closing highs, this was a mess up here. So a lot of people were looking to this and saying, oh, this is a higher high. But we came down for equal low closes with a lower low swing. Very volatile price action up here with all the swings. Pushed back up. And this was a rejection of the close open right there at that 106 region. And that's where, if you recall, I went short upon seeing that rejection. And, we saw price drop down to our $95,000 to $96,000 range, go sideways, as I'd mentioned, once it broke down into our bottom side of the range after the 93.5 was taken out. It was basically last stand at that $88,700 to $89,000. This swing over here on this daily was also that weekly higher low swing of the 93.5 close there on the weekly. That was also a higher low close. So, this is good to see Bitcoin trade back to this area, right around our yellow zone, 101 to 104. And for those that might be wondering how I came up with this, we had a common area. We had the 104 swing high, all-time high, before going up and tagging that 108.388 or 108.4. And this was defining the high at the time, and then we had a higher high close at the 101. So we had 101 to 104 right here. This turned out to be a nice area once broken to go up and make a new high. Kind of nuked through, got messed around with in terms of the swings, but it turned out to be a very important area after the double bottom on a close here. Basically equal low swings as well. We did get the lower low swing to 89 and then moved right back up. And you saw price closing right on that 101 around here. So big important area, big and important historical area around the 1272 Fibonacci extension from the prior cycle's all-time high at 69 to the bear market low at 15.5. So big area of interest. And the question now is going to be, okay, we know this is of course, a nice consolidation push up. Do we get any more? That's kind of what a lot of people are wondering. Now, weekends have been a little odd. They can either be very high volatility or very low volatility. And so let's go ahead and take a look at the daily. In terms of volatility metrics for the bands, and then start looking at momentum and all that kind of stuff. So we see that Bitcoin did get a close open right above the upper second standard deviation, initiating expansion again up to the top side. But you notice the bands are following very closely. So they're not really getting expansion in the truest form. It is the price is just pulling the bands up with them. But volatility remains high. And now we have some important confluences with areas of interest, right? So now we have up here, we have the 102 region, of course, just sliding in below the 1272 and that 104 region. Start looking above there. We're looking right to the green zone, 106 to 108, and then the all-time high and higher. And in this case, to the downside, if we do lose 101, we're looking for that upper first standard deviation right around 99.5. Well, look left, and you can see that it's this swing high before the big breakdown. So that is confluent with that area. If Bitcoin still plays in the 101 to 104, we're likely going to see that move up to the next high somewhere around the $100,000 region or slightly above. Now, more importantly, though, is the basis band is right around this inflection point at $95,000 to $96,000. In fact, some of you that are very well acquainted with technical analysis know that the $96,000, $95,000 area, depending on your chart, depending on the exchange, is going to be the point of control for the range up here, and that still remains true. Now, It's also confluent with not only the support and resistance level, point of control, the highest volume area, but now the 20 simple or the basis band here. You can see that to the downside below the, I'm having a tough time talking. I do apologize. Below the 95.5, we have the lower first running right at the top side of our red zone at the bottom of the range here at $92,000 or so, slightly above there. And the lower second is right there at the 1.168 or 16.8% above the prior cycle high at $88,700 to $89,000, depending on your chart. Lower third is now confluent with $85,000. And of course, 85 to 86 is where this consolidation resolved to get back into the range. So we have a lot of confluences across the board here. Now let's go ahead and take a look at RSI. RSI, there is no bearish divergence on this move just yet. Again, there is historical bearish divergence that could form off of the range, but we need to see a high painted. We'll define that criteria in just a moment. But more importantly, the most powerful bearish divergence is going to be in trend bearish divergence, showing that that trend is losing its strength or relative strength. In this case, we don't have any to note just so far. Man, I'm really having a tough time today. I'm so sorry. All right. Stochastic momentum is back up on closes above around $101,000. So if we start to see over the weekend this range get breached to the downside on any close, then we're looking at momentum starting to keel over. But again, this would just be putting in another higher high. So in this range, I will say that there is the potential for this thing to push through. It is, just kind of over the weekend, it's a little bit dicey. We don't know if we're going to get volume or not. Maybe we do. Maybe there's some sort of news that helps spur volume. Whether it's to the upside or downside really, doesn't matter. It's just as likely to put in a high and try to come down. Where would it put in a high? From here on any closes below 102,330. But again, as long as it's sticking in the range 101 to 104, nothing big. And even above that, 99.5 to $100,000 by the upper first is fine as well. And quite honestly, it's a fair game all the way back to that $96,000 for a test if it really does want to put in a high. Otherwise, you got to look up into the right to the next big zone as the more likely possibility. If we don't see it falling out of 101, especially, then, up into the right is the name of the game. 106 to 108.4, and then the high at 109, 340 and higher. And in fact, we're going to take a look at some of the possibilities to the upside as well. But does pay to have your head on a swivel. One of the big reasons why is we have a lot of information coming out next week. Now, it's going to be on the 13th, so that's going to be on Tuesday. We're going to get inflation numbers. We're going to get all of the relevant inflation numbers for the yearly and the monthly. So the two monthlies are going to be our core and our inflation rate, and then we're going to get inflation rate year over year and core inflation rate year over year. So that is going to be coming out next Tuesday. And then next Wednesday, or is it Wednesday or Thursday that he's talking? And well, it looks like I thought Powell was going to come back out and talk about these numbers. Maybe not. Maybe it's just going to be a meeting. They're probably going to have a Fed meeting. And we'll see what it, not an FOMC meeting, but they're probably going to have a meeting shortly after that. I thought I saw some numbers, but the big one that I am interested in is some of the, not just the inflation rate stuff, but the retail sales and the PPI month over month. So PPI is going to tell us a lot, in my opinion. So we're gonna have to monitor the actual month over month data as it relates to what we saw occur last month with the tariffs. Obviously, there's some news regarding deals. There might even be more news. So understand that can throw in some volatility, right, to the upside and downside. But as it stands right now, we have to have context for what's going on. And that context is that this is still just a trend break on the weekly. So let's go back to that weekly. Let's define our criteria real quick that we would like to see. And that is that, the weekly downtrend break right here, that's all this is. And as I've mentioned many, many times now, no matter how high this move goes, when it puts in a high, we have three scenarios that can play out. And I'm just going to give an example utilizing the current price action as the high. It could potentially go much higher. I don't know. We just have to refer to our criteria that I just talked about on the daily. But let's just say that this was the high. Then we have the scenario where we get a higher low. And by the way, this is just an example. And then we'd be looking for a higher high as it relates to wherever this high comes in. That higher low is the trend reversal setup. And that is going to be the most important period for evaluating kind of where things might go in the macro, is once that's put in, can it go back and break the last higher high and then confirm the trend reversals. Trend reversal setup would be the higher low. That would be the first scenario. Equal lows are fair game. I don't like closes that are lower, but equal lows still are fair game on swings. In this case, same deal. It would be the trend reversal setup. We would need the trend reversal confirmation upon breaking the higher high, whether it's here or higher. And then there is the other scenario. And that other scenario is that this becomes a deviation and this turns into a big old bull trap up here, right? This would be your bull trap, and then it drops the low, and that's your bearish scenario. I will tell you that the higher probability setup from here is still going to be the bullish one. Higher low, equal low structure. Even if it's just a swing, it can be a shallow swing, it can be a deeper swing down, doesn't really matter. And from the weekly standpoint, there's a few things that I want to see for continuation as well. I want to see closes, like I said, above this zone here at 102,563. That would look really good to retest where we just put in that daily high on the next close open all-time high here at 104,445. Anywhere above there, the actual all-time high area and higher is fair game. You see the upper second standard deviation is 106,958. So it's essentially 107. Any closes above there, we kick off expansion. Again, do note that the upper third is right there at $114,000. I also want to call out another thing here for those of you that want to find confluences. And look, the Gann and Fibonacci guys are going to get on my ass about this one. I utilize fibs a little bit differently. I've been doing it for a very long time. I have a different style of analysis. I'm not trying to spite any of you. But we see that there is some fib levels from the prior range that aren't really lining up anymore, right? So we had, the initial move up through the 1272 here. We almost got to retrace all the way back to the one spot here, but we did have some confluences around like 95. We had the $87,000 on the daily there. So if we look at like the daily, there was the, it was the 87,500 for the daily there. So it was fine for the move up initially here, because we did see how nicely this tracked, even coming into $95,000. And then it formed a range kind of around that up to the 1786 and 1888, where we saw the highs come in on a closing basis. So it was good for the daily. Now, if this is going to be this is a major low now on the weekly, that's 74. By the way, it is 74, 420, 69, because the market loves memes. We can pull a fib from this structure and we can take a look and see kind of where things could be headed. And if we start closing above the upper second and break above the all-time high here, you're going to see the upper third here stretch out to meet that 1.168 at $116,000. I do want you to note the 1272 at about 120 to 121 and a half here, and then the 1414. This is a really big one. This 1414 matches the 1414 from the prior cycle all-time high at $69,000 to the $15,500 low. You might be saying, wait, what? Really? Yes, it does. If this is going to be this low and, of course, turn into a monthly low, which, by the way, we want to see, this would, has to close like this. Also, the monthly close would be much higher. Monthly close is at 102 and a half, 102.4, right? Right where this weekly is coming in, essentially at 102 and a half. Now that would be a nice closing higher low in the monthly and lock this weekly low in as a monthly low as well, thus creating a nice, beautiful higher low and higher low major low structure. And in this case, we can safely pull this fib in this manner, and we can start looking up to this 1414. Well, I want to pull another fib that's going to look like a mess. So give me a moment, because we're going to flip the fibs on and off, but we're going to pull log scale fibs, by the way. And we are going to now zoom in. We're going to zoom in on the weekly here, and we're going to look at this 1414 specifically. And I want you to note the confluence up here. All right, so we've got the confluence there. It's 128 and change. You'll see that this line is a bit brighter red, because if you look here, from the local fib to the macro fib, it is the same number, You don't get confluences like that unless you're trading Bitcoin for sure. It is pretty cool to see. So let's go ahead and just show you there. That is the same number. So, and I do give these things room. By the way, from the macro fib 1272 to the 1414 would make sense as well. So above the all-time high, although there is around that 120 to 121 and a half as a key area. Some are going to have just above the 109. They're going to have 115. There are some local fibs that you can pull from that. We can, that will get you that number, that are confluent with like around 114, 115. And, that would be right around our weekly upper third. So understand that, this above there, essentially, though, the 1414 is the major area of interest, and that would look really good. That would start to solidify a few things that say that, yeah, sure, that could potentially kick off a run much, much higher. But, got to wait and see. You're probably going to hear a lot of noise on the first big daily pullback if it does not break above the highs, or if it swings. If it swings above the all-time high and then closes back below, you're going to hear double top everywhere on your timeline. Okay? And understand, like what I just said about the weekly, it's a more probabilistic bullish setup because of the trend break. And there's basically three ways that it'll play out: higher low, equal low, or deviation. And that does mean that if you feel like you missed out, you didn't, because it's going to put in a higher low, equal low, or a lower low at some point, no matter how high price goes. And those are the higher beta plays. And in this case, some people are already playing the pullback to the prior range, and like myself, bidding on the way down there, especially below 80. Like, it would just, for me, it was a no-brainer, but that doesn't mean that it was for everyone, right? Some people were scared, and rightfully so. And, some people didn't know what happened or what was going on, or don't follow technical analysis, or maybe don't even know technical analysis. But what I'll tell you is, you're looking for higher lows, equal lows, or lower lows from here on the weekly, which means that it's going to put in a high and it's going to retrace. So that's where we start evaluating, and that's where the rubber hits the road for a lot of people, including myself, for possibly a massive swing position for like a big ass leg up or something, right? Now I'm in a swing position and I picked up spot and all that stuff, but even I'm waiting for that trend reversal setup on the weekly, and we will see if we get it soon. All right. Um, I'm not going to do ETH and Sol. I talked about it. ETH above 2,300 is good. So I'll just say it. Weekly closes above 2,300 is what you want to see. Daily closes above 2,320. We'll just look at the price action here. Looks good on the daily. Need to see 2,300 close on the weekly. That's a beautiful range recovery. Doesn't mean it can't be tested again. And for Solana, 169 is the weekly recovery. 180 is the daily that I want to see taken out from there. And then for Ethereum, the other big one is 2555. So that's the big one on the daily after getting above 2,300. And of course, on retraces, we want to see 21 to 23 hold. And for Solana, it's pretty safe all the way down to 125, which would be a massive drop, by the way. But 150 would be the medium term on any kind of retraces. And then that 125, 126 area that we talked about prior. Just reference the short analysis that I did on Monday for it. But I am losing my voice a little bit here. And I want to thank you all for the well wishes. And I hope to be back to full strength next week. I've been trying to push it the past day or so to see where I'm at. And I'm feeling good. So, yeah, oh God, Dave, I did it. For those, that would be Dave, not David, because Dave is the one that goes, yeah. So, and I just did it. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Have a great and wonderful weekend. And, I'll talk to you again on Monday. Take care of yourselves.